Test, test, test. Test, test. Palantir bearish action hitting. All right, 12 o'clock. Let's wait about 20 seconds or so here. Let some people pile in, and we will get started. All right, let's do it. It is 12 o'clock Eastern time. It is 10 a.m. where I am here in Idaho. And I am going to be talking about this week's market update. Glad everyone can join me. First, a quick disclosure. I'm an associated member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Quick position disclosure. Again, I'm a professional trader here at T3 Trading Group, so as a result, I have to follow a lot of FINRA rules and regulations. So here is my current position disclosure. I'm long and strong. Got a couple shorts on, but mainly to the long side of this market. I actually did a bit of sizing down yesterday. Just took a little off the table on both the long side and the short side. Volatility's picked up. The P&L swings have been a little crazy lately. So I sized down a little bit, but overall this has been one heck of a market environment. About me, so I've been doing these weekly webinars for, we're probably working towards a year now. So if you've been following regularly, you probably know my background. But real quickly, I'm senior trader and registered principal here at T3 Trading Group. I have been with T3 for, I guess over a decade now as a professional trader. I've mentored well over 100 professional traders here at the company, currently managing a group that is well in excess of 50. It's probably in excess of 100 right now. I haven't fact-checked that recently. Spare time, big into martial arts, big into skiing, big into traveling. So again, right now I'm here in beautiful Idaho. I'm typically running our Manhattan office. I run the trading floor, really myself and Scott Redler. And our trading floor has been closed we're working towards a year now. I've been using this as an opportunity to travel around the country, spent a lot of time in Wyoming, California, Idaho. Now I've come back to Idaho because I like to ski. If anyone's a skier, I'm 15 minutes away from Grand Targhee. I'm 30 minutes away from Jackson Hole. The snow out here is just incredible. It's been pretty awesome, honestly. I do miss New York, though. I do miss getting back to the office. So today I'm going to be talking about markets first and foremost. That's what I love to talk about. But here's my email address. So if you want to speak to me directly about anything, about markets, about T3 Trading Group, about becoming a trader at T3, either on our proprietary trading group, that's the professional side of the business, or bringing your retail account over to T3 Trading Group. Here's my email address. Feel free to reach out. Heck, even if you want to talk about martial arts, Conor McGregor, is he washed up? Maybe after that fight last weekend, or if you're a skier also, you want to chat with me about anything. Here's my email address. Definitely reach out. Don't be bashful. I'm generally a pretty friendly person, even though they keep me pretty busy. All right, let's go to the charts. Let's talk about markets. Here's Airbnb right now, which I have a position in that I'm just monitoring. I think that Airbnb looks fantastic. I can talk about that in a minute. Let's start with the S&P. Yesterday was insane. Yesterday was completely insane. So look, overall, this is the SPYs ETF that represents the S&P 500. The main indices that I'm constantly keeping an eye on are the S&P, the NASDAQ, and the Russell. I don't really look at the Dow so much. But the S&P 500 being kind of your broadest market index. Doesn't matter which index we look at. Market's in an uptrend. Very clearly higher highs and higher lows. The thing about trends is that trends tend to last for much longer than anyone expects that they will. So what I'm telling my team every day in the morning meeting is, guys, we got to continue to err on the long side of this market. Continue to err on the long side of the market until something changes. Something will change eventually, but I don't know when. And I thought that this market was crazy back in October, November, when we started seeing these stocks explode, having these 200, 300, 400% moves over the course of a month. Well, the market's continuing its trend of crazy by getting crazier and crazier and crazier. This Wall Street's bets community, they are absolutely blowing up some of these funds. Who's going to win in the long run? I don't know, but how can I not talk about GameStop? GameStop, this is nuts. 140% of the float is short. Until a couple months ago, my team and I have actually been talking about this GameStop really since the end of last year. And then along with a couple of the other main, heavily shorted stocks, Bed Bath & Beyond. Again, if people have been, following my webinar every week and seeing my position disclosure, you saw Bed Bath & Beyond in there a lot. We've been looking at some of these potential things that are heavily shorted. GameStop changed their company around. They're not going bankrupt anymore, I don't think. They brought in new management. They brought in a good management team. They've started the revolution towards online sales. And that's the key to all of these retail businesses. And I spoke about that, obviously very different company, But when Macy's last reported earnings, I'm trying to figure out when that was. I think it was, I can't actually remember. When Macy's last reported earnings, they initially traded it down on earnings because they missed. They're pretty sure they missed on earnings, they missed on revenue. But the key in the earnings report, and I spoke about this to my team on that day when we said Macy's was a buy, the key on that earnings report was how much growth they had in online commerce. That's the key to the business. And guess what? GameStop has also had a solid growth in online commerce. They're getting a temporary boost from, the new PlayStation, the new Xbox. They got new management in place. They got good things going on. Company's not going bankrupt anymore. Probably doesn't deserve to have 140% of the float being short. But does it deserve to be at $160? We can't even see my chart here. Where's that high? Yesterday's high is $159.18. Here, we can... This chart is so insane that it's actually difficult to be able to even see the whole thing. Let's zoom it in a little bit. Yeah, this is just completely insane, this move that came in yesterday. Does GameStop truly belong over $100? The answer to that, in my mind, is very clearly no. It doesn't belong at $14 anymore either because the company changed around. But this has just been the most insane short squeeze I have ever seen. I mean, we can look at the 5-minute chart from yesterday into today. Here's going back a couple of days. So I actually day traded it very briefly to the short side on Friday of last week into the halts right in here. And, on small size, did really well for myself, made $5 to $10 on the short side like 3 or 4 times, got out of the trade, did not keep it as a swing trade, was just a little bit of a day trade into this parabolic up move on the volume. And then I wake up yesterday morning and I look at this thing and it's, trading at $98. I overslept a little bit yesterday. I got up at probably 5:45 a.m. Eastern time. Usually I wake up earlier than that to start my research process. I already missed yesterday morning at like 4:30 in the morning. The stock was at 136. And I was like, all right, that's it. That has to be the end of the squeeze. That's going to be the absolute high in this GameStop, this pre-market 136. Shame on me for sleeping till 5:45 in the morning Eastern time. It's 3:45 in the morning local time. I wake up pretty early. I go to bed pretty early. My research process is really important to me every day. I provide my research to my team in the virtual trading floor in the morning meeting every day. And I was like, that's it. I missed the final up squeeze. There are, without a doubt, entire firms that are short focused, entire funds that are short focused that have completely blown up. We're seeing, Melvin Capital get basically bailed out by Stevie Cohen and Ken Griffith. And this thing, just absolutely incredible what it was able to do here. I thought that was going to be the top. We're looking at it early on in the day, looking at this ADMA catch up to the space of price action, figured it could get a pop, did not expect that this thing would then have a rip from $91 up to $159. That is a pure fund short squeeze. If I studied economics once upon a time when I was in college, if anyone else studied economics, they may have taught you a class one day on the efficient market hypothesis. That's garbage. There is nothing efficient about how GameStop traded yesterday. It is forced buying, forced short covering from hedge funds that are completely blown up. And look at the time here. So the time is 10:45 a.m. yesterday when GameStop peaked. Look at the SPYs. All of a sudden at 10:45 a.m., the SPYs took a massive hit yesterday, which doesn't surprise me. This is institutional de-risking. You are being forced out of some of your short positions at a loss. GameStop. Blackberry. Is anyone watching the webinar today own a Blackberry phone? I know I don't. I know that they have some intellectual property that they're able to still make some money off of. I know they have a partnership with Baidu out in China, for their electric cars a little bit. But I mean, come on. BlackBerry breaking $20 yesterday. Look at this daily chart. This thing was just at $7 like a few trading sessions ago, and now it's getting back above 20. How does this company even exist anymore? The CEO comes out yesterday and goes, I have no idea why my stock is at this price. There's no new material information. Well, I know why his stock's at that price. It's because there are entire hedge funds that are short focused that blew up yesterday. And same thing. What time? 10:35, basically 10:45 is when this kind of peaked out. AMC we can look at, same thing, kind of giving this last little hurrah into highs. I know it broke it this morning, 10:35 a.m. yesterday. And then look at what the SPYs did. This SPY crash does not surprise me because it was de-risking from these funds. They were just forced to cover their positions on their shorts as a loss. Now they are being forced to sell some of their longs to raise cash and to be able to raise capital and to reset. What did surprise me more than anything was the fact that the market, after this sell-off, almost made new highs by the end of the day. That is extremely bullish and extremely impressive. I thought that this sell-off here, look at the volume on this. There were no bids in sight. I was warning my team as we started to crash. I was like, guys, don't buy this too early. We need to be patient. We identified that 380 was potential support. They just blasted right through it. SPYs here put in a low yesterday all the way down at 378.50 or so before actually bouncing on that capitulation. And if anything, what I was looking at was shorting into this rebound. So, again, eventually, I talk about this in webinars a lot. The way that I view markets in terms of understanding extension is the 8 and 21 EMA. So the blue line here is my 8 EMA, the red line here is my 21 EMA. So when I'm looking at a market that's at 378.46 at this low, with the 21 EMA at the same time being at 382 and change, I would say that this market is extended to the downside from the lower band of equilibrium by about $4. It's a lot for a 5-minute chart. And again, a market that's extended can always become more extended, but eventually an extended market will have to have a correction. There's two ways in which a market can correct, time or price. This is an example of a price correction. Market becomes overextended to the downside, volume capitulates, you're looking for this bounce back. That bounce back typically will happen to somewhere in this equilibrium area, the space between the 8 and 21 EMA. They actually overshot it here a little bit before putting in this little shooting star here on the 5-minute. At the same time, we had confirmation up from a DeMark indicator. We had a 9er on the 5, which also is an indication to sell longs or potentially put shorts on. So I actually liked the market short off this candle as a reshort after this move. And the pull back lower here wasn't that deep. Okay, well, this bounce back was pretty strong here. Maybe the market just ranges out. If you asked me at this time yesterday what I thought the lowest probability thing that could occur for the market after this sell-off would be, I would say it would be that the market makes new highs on the day. And guess what? We didn't make new highs, but right into the very close, this is today's price action, right? This is the end of yesterday. Right into yesterday's close, we got really close to making new all-time highs. The probability, and again, this is the way you need to look at markets. It's about probability. Risk, reward, and probability of success. That's the magic formula of trading. That's what it comes down to. And in terms of understanding probability, this degree of a sell-off that was institutional de-risking, followed by the market making new highs on the day, very low probability. Again, probability is probability. Anything can happen. Maybe someone watching the webinar today won that $1 billion Mega Millions from last weekend. I don't play the Mega Millions. I don't gamble at all. I don't play in casinos at all because I understand probability. I know probability is against me when I walk into a casino. This is why I'm a trader, because I understand as a trader, by developing a rule set, I can put the probabilities in my favor where I can be consistently profitable over time. So I know from trading experience that when you get this degree of a momentum move to the downside, yes, I know, like I'm saying to my team every morning, we are in a strong uptrend here on the daily chart, and everything I do starts from the daily chart and works its way down. So every morning I'm telling my team, we got to continue to err on the side of the longs. But when you get this kind of momentum sell-off that happens intraday, the odds of a new high coming in by the close, probability, very low. And guess what happened? It's there. It just shows you the demand in this market right now is crazy. There are so many signs that are showing us the degree of demand in the marketplace. There are so many signs that are showing us just how much liquidity exists. Look at the IPO market. Look at the SPAC market. Look at all the secondaries that have come out and have been absorbed by the market. I've been trading professionally really since 2008. I've been with T3 since 2010. Usually secondary offerings lead to a failure for that stock. Meaning, and there's been countless examples of secondaries that have not failed over the course of the last 6 months. So when a stock implements a secondary offering, they are increasing the flow. It's supply and demand. There will now be more shares available, assuming that there is the same demand for that stock. The stock goes down in price. And usually what ends up happening is whatever the secondary offering price is, very often the stock ends up trading below that price by the end of the day. We are not seeing that in this market environment. The market is absorbing all of this new supply that is coming into the market, which has also been very unique. Over the course of the last 10 years, it has been shrinking. What does that mean the market has been shrinking? Well, again, it's just supply and demand function, right? What makes the market increase? More shares in the marketplace, IPOs, secondary offerings. What makes the market shrink? What makes the market shrink? Stock buybacks, merger and acquisitions. Well, over the course of the last 10 years, and this is what has helped to create such a massive bid on this marketplace over the course of the last 10 years, is that every year the market's been shrinking. There have been more stock coming out of the marketplace through M&A and buybacks than there have been coming into the marketplace through IPOs and secondaries. Well, that has changed. That changed last year. Last year, I was just reading an article this morning, 2020, the year of the SPAC, right? What was it? $79 billion worth of SPACs came on market, I think, in 2020. Well, guess what? 2021, we're not even at the end of January yet. I think we already have 17 billion worth of SPACs that have come into the market. That's all new supply that has to be absorbed by the market. Secondary offerings are coming out like crazy. And I wonder at what point there will be a tipping in supply and demand. On the one hand, we have cash everywhere, right? Monetary policy has never been easier. We have federal stimulus coming in. On the other hand, we have all of this new supply that's coming into the marketplace. And right now, the market's been able to absorb that. Will that change at some point? Probably. When will it change? I have no idea. There's no real way to know. And this is why we have our technical analysis. What I know is that the market's in an uptrend. I need to continue to err on the side of the longs for the market until that actually changes. So that is where the S&P is right now. Again, yesterday, just one of the most insane days I've ever seen in my entire trading career, between what we saw with Gamestop that had like 8-9 different halts. I really don't think that this is a $100 plus company. I could definitely be wrong, but I really don't think it's worth that. But I'm not coming in and shorting it. I'm not taking that trade. The risk in being involved in this name right now, it's just too much. And again, why would I want to be heavily shorting things when we're in a marketplace where my S&P looks like this, where my NASDAQ looks like this, where my IWM, look at this elevated slope in the IWM. When it's time to start shorting, the market will tell me I don't need to be first to it. So that's kind of the market as a whole, and it's, you know, some of the crazy high-flying stocks that everybody's talking about. Obviously, I needed to touch upon that a little bit today. This market environment is just completely insane. We really haven't seen anything like this since the tech bubble. But Are we in 1996 or are we in 1999? I have no idea. I think that what we're seeing right now could potentially last for years because monetary policy is going to be staying loose for a long period of time. So we'll see how all that plays out. As far as individual stocks go, this is a really big week for earnings. We got Microsoft after the close today. Microsoft has had an incredible move here. We had been talking about how big tech basically did nothing for 4 months, looking at Apple, Amazon, Microsoft, basically all the FANG names, and we were really, as a team, we're keeping an eye on these things for them to wake up and potentially break out. Apple started to do it a little earlier than a lot of the other names. Apple started to go back here in December, like December 15th was when we first kind of identified this. But the real catalyst that woke the rest of these guys up was Netflix. When Netflix reported its earnings on January 20th. Was that the beginning of last week? I think it may have been. And that woke up all the rest of big tech because Netflix has now pulled back to this 80 EMA. This is a healthy technical pullback. It's actually looking like a pretty good buy here in this area. And all these other stocks have gone. When you have a big run into an earnings report, it means that those numbers are going to have to be really good a lot of the times. A lot of times when you have a stock that has a big run into its earnings report and then it just kind of meets expectations, or even if it beats them by a little bit, it's not unusual to see them sell off. Goldman Sachs is a great example of that. Goldman reported an excellent earnings report, and the stock sold off ever since. Sold off all day that day, and it's really sold off ever since. But I don't understand. This is a question I get from new traders sometimes. I don't understand. Shouldn't the stock go up if they beat on earnings? It's about expectations. So yeah, maybe it beat the expectations of the average sell-side analyst, but who cares what the average sell-side analyst thinks? I want to know what the expectations are of the big fund holders who hold equity in Goldman, because they're the ones that actually move the stock. And guess what? This had a huge run into its earnings report. Expectations were extremely high. They beat the sell-side analyst expectations consensus, and they sold off all day because of the run that they had into it. So we'll see what happens here with big tech. It was very similar last quarter. I remember Apple had a massive run into its earnings report last quarter, and I was nervous about it. I think that was here, right? Oh my gosh, it had this huge run off the March low, all the way from whatever, $55 split adjusted to $100. It basically doubled. It's basically at highs going into the earnings report. This could be difficult. And then they announced like one of the best earnings reports I've ever heard from any company in any quarter ever. And they announced the stock split and the buyback and the dividend increase and everything they had going on, and the thing exploded from that. But that was an absolutely stellar report. So we'll see what happens this week. I have positions in Microsoft, Apple, and Amazon. I definitely like them all a lot. I think big tech has woken up. Amazon really needs to clear above this 3360 to start getting going again. I've got, this Airbnb position has been really my biggest position for a long time, really ever since it IPO'd, back into this area. I remember calling it out to my team basically on this day and into this day. They sold it off for 4 days off the IPO price. A lot of people were saying it was overvalued. I love this company. I've been staying in Airbnbs basically all year in different places throughout the country. I love this company. This was the day when options turned on. Options turning on. That's been the big thing from this, again, going back to this Wall Street Bets community. Options are a levered product. And if you have everyone getting involved in options purchasing all at the same time, that's a leverage product. It juices that stock higher. Is it a coincidence that this day here, which is basically right at the bottom, right after the bottom, is the day when options trading got turned on? Options trading doesn't start the day the stock IPOs. It starts after. And this is one of the things we were looking at. Oh boy, the options trading could come in, it could really start juicing the stock up, and now it's just been higher highs and higher lows ever since. Made new all-time highs again yesterday. I told my team back when I was buying this thing, in the low 130s and upper 120s, that my price target on the stock was 215. and I'm still holding stock for that move to 215. We're getting there. I've obviously booked some up on the way, so I'm not as heavy as I was because this has been a really big move, but I still really like Airbnb. I've been watching this Poshmark. It's been disappointing. Let's just zoom in here so we can see this a little bit. Don't like how that chart looks. Yes, sometimes these charts get a little difficult to read on the IPO. They IPO'd this thing around $100. They sold it off about 32% or so, basically putting a low of $68. Identified with my team here this shooting star candle that came in when it came in on the 5-minute chart as a spot that I really liked it as a buy. You kind of had downside capitulation here on volume. I mean, they just slaughtered this thing. This was the day after the IPO. Took a day of rest in negative territory or so, and then worked its way down, and then the volume really capitulated here. I kind of like that as a buy. Inside day. This thing just hasn't been able to go, but they also haven't turned on the options trading for it yet. So I'm really curious to see if options trading, similar to what Airbnb does, can come in and kind of juice this thing. I do have a position on it, but it needs to get and hold above 75, and it needs to do it soon. If this thing keeps hanging out below 75, if this thing ever gets back below 70, then the idea is done. So you get, you put your ideas on, you have risk reward, you get stopped out, but I do think that there's potential when they finally turn the options trading on, which could happen any day at this point, that this thing gives a move back to, the mid to upper 80s. Maybe $88. So that's kind of a trade that I've been looking for there for Posh, which is also a recent IPO that I got myself involved in. And that's basically it. We'll see what happens with earnings. And my team and I had some really good trades today. DKNG early on in the day. DKNG got a solid upgrade. We were looking at this thing at 53.50. Gave a stellar run off the open. All the way up to 56.50. Beautiful early momentum here for a day trade. I've been looking at MBIS was one that my team and I have been looking at as well. Had this pullback here. So we're seeing this a lot where these stocks go completely parabolic and then they have these big price and time corrections, what I was talking about earlier. Corrects down to the space between the 8 and 21 EMA and then starts to reset up with some sort of wedge we're seeing a lot or descending channel. It gives you clear resistance. The clear resistance thing here being $7. If it gets above 7, we're looking for further momentum to come in. I like this little 2-day setup that it built into in front of 7. See tails above 7, it's not ready to go, but then gives you this continuation hammer followed by an inside day that breaks to the upside. So MVIS has been on the radar, and that one really went today. VLDR for an opening drive trade today as well. These are more day trading opportunities that we were looking at. A momentum trade here through $25. Risk on it, maybe about 20 cents or so, giving it to, we call this an ignition bar, this high volume bar that comes in. So it's an important stop loss point that you can use for yourself. So this little day trade here, 20 cents worth of risk, rips up for $1.20 worth of reward. Those are the day trades that I like to take. Those more momentum-based day trades in this type of environment. And then at the same time, what I'm often doing is I'm managing a portfolio of swing trades as well that I oftentimes actively day trade around. So that's kind of the update on this week. So we'll see, next week we'll be able to talk about how these earnings reports went. We'll be able to talk about how the Fed meeting went. We'll see what's going on. Is GameStop going to be at $1,000 next week when we're doing this meeting? Is it going to be at $50? Your guess is as good as mine. A lot of these names are completely nuts, but we definitely want to keep them all on the radar. With that said, let's jump back to the presentation here. Let's talk about T3 a little bit. So I've been a professional trader at T3 again for probably over a decade at this point. We do also have retail trading available as well. So T3 Trading Group is one of the largest proprietary trading firms in the United States. We have hundreds of licensed professional accounts. I think we have over 600 or so at this point. We have different offices throughout the East Coast. Our headquarter office is in Manhattan. That's usually where I'm working. Again, I run the trading floor at our Manhattan office. Basically myself and Scott Redler. And then we have remote traders who are spread throughout the country who have access to the virtual trading floor. If you have an account with us, you get free access to the virtual trading floor that I run. It's called the Pro Desk. It's where the majority of our professional traders are. That's why we call it the Pro Desk. Right now I'm in beautiful Idaho. I've got the most idyllic mountain scenery here behind me, and I've just been utilizing the virtual trading floor to be able to communicate with my team. So it really doesn't matter at this point in time where you are in the country. When we do get our offices reopened, if you're a professional trader at the company, you'll be welcome to come in, or you can stay remote. T3 being an SEC broker-dealer and member of FINRA SIPC, I said that earlier, meaning all of our traders have to become professionally licensed, all our professional traders. If you don't want to deal with licensing, you can open up a retail account with us. But all of our traders have to be professionally licensed with an SIE exam and a Series 57. We will provide you with study materials, textbook, online classes, online practice tests, everything that you need to pass, and we'll sponsor you for those exams as well. Once those exams are passed, we can get started with trading. On the professional side, we have 3 different trading software options: Lightspeed, Sterling Trader Pro, and WEX, also known as Wolverine. The one that I use personally is Lightspeed. Sterling Trader Pro is also an excellent software. That's what we use on our retail side. So if you open up a retail account with us, you'd be getting access to Sterling Trader Pro. Really, the advantage of having a retail account with us is direct market access. Most of the brokers that exist in this day and age are selling your orders out to HFT firms. We're not doing that. You choose as a trader, whether you're professional or retail with T3, how you route your orders. I choose to place my orders, if I want, directly onto the New York Stock Exchange, directly onto the NASDAQ, directly onto ARCA, direct market access. It's become really rare in kind of this modern day age of Robinhood and free commissions. There are accounts where you can have free commissions. There are no accounts where it's free. They're making money somewhere. There's a reason why Charles Schwab stock and Interactive Broker stock are performing as well as they are, and it's not because they're giving away their business for free out of the goodness of their hearts. Asset class wise, we've got equities, we've got futures, we've got options on futures. I'm really specifically equity focused with the firm. But reach out to me if any of this interests you, and I can either speak to you directly about it myself, or I can put you in touch with the right person. Options trading. So again, we were just talking about this when we were reviewing charts. Options trading has become extremely popular right now, and it's part of what has juiced the movements on a lot of these stocks. The main reason, there's many reasons why people may trade options. But the main reason why most people trade options when I speak to them is because of the natural leverage that's inherent in the product that you cannot get as a retail trader trading equities. For myself, the reason I've only ever been exclusively equity focused, I don't personally trade options, is because I have no need for that extra leverage. As a professional trader with T3, they give me as much capital access as I could ever want. Our starting capital access is usually 20x for day trading and 8x for overnight. Meaning, if you open up an account with us with $50,000, we're basically going to be giving you access to $1 million. So why would I want to trade options, which are a less liquid product and subject to time decay, just for capital access when I already have as much capital access as I could ever want? That's always been my thought process. With that said, I have people on my team who trade options. Some people like to use it as a risk management tool. They like to sell covered calls on their swing positions. We also have complex options traders who trade spreads and iron condors and everything else. So in that case, well, then it makes a lot of sense to be an options trader. But if you're really more of a directional trader like I am, I buy a stock because I think it's going up, and I short a stock because I think it's going down. If you're really more of a directional trader, you're much better off, I personally think, trading equities with the capital access that you're able to get as a professional trader with T3 as opposed to trading options. But, again, if you want to be an options trader, reach out to me. It's not a problem. As far as new traders, if you're new to the industry, T3 is a great place to start because of the free training and education and development that you're going to get. We're not charging you fees on the way in for access to my training program, access to my daily morning and afternoon meeting. I do a Q&A with my team every afternoon where if you're a new trader or an experienced trader, you can ask me any question about anything. Ask me a question in the afternoon meeting about a trade you took, about routing, about game planning, about risk management, about anything. I'm happy to help. So you're going to get access to, some serious training and development. I was already talking about the capital contribution. So once the exams are passed, you have to fund your account with a capital contribution. The amount you fund your account with is really, for the most part, up to the incoming trader. And as I was saying, we'll provide you buying power capital access at 20 times and 8 times to trade with. So someone who deposits $50,000 into an account will give you $1 million in capital access for day trading. And we'll give you $400,000 in capital access for overnight positions. What this means is risk management is extremely important with that type of capital access. I tell my team all the time, what I'm doing as a professional trader is probably 85% risk management, 15% reward maximization. That's really my formula. You buy a stock, the stock goes up, congratulations, you're making money. It's not that hard. Show me how a trader reacts when their ideas fail. Show me how a trader reacts when they buy a position and it goes against them. And I'll show you the difference between someone who's successful and someone who's not successful. Experienced traders, again, our size, I believe T3, I think we're the largest prop trading company out there. We're very well capitalized. So if you're an experienced trader and you want to put $1 million into an account because you want access to $20 million, it's no problem. Reach out. And you get all this other great stuff for free. You get access to my VTF room, which is called the Pro Desk. It's something you could purchase on your own for $2,000 a month, or you could get it free by having a retail or a prop account with us. You also get Scott Ruther's VTF. The Red Dog, he's been trading since the 90s. Phenomenal trader. I've learned so much from him over the course of my career. You get access to his Red Roll Access as well. You get access to my virtual trading floor and my training program. So, again, just by having an account with us, it's like you could go and you could purchase all this stuff for $5,300 a year, $6,000 probably if you include my training program, or you could just have an account with us and get it for free. It's really that simple. The reason why we do it for free, it's really simple to understand. We're giving you all this stuff for free because if you have an account with us, we are incentivized for you to be successful. If you're a professional trader or a retail trader, and we are giving you tools that make you money, well, that makes you happy, that makes you money, that makes the firm happy, that makes the firm money. We think big picture. So yeah, you can purchase these products. I really don't have an interest in selling my training program to people. I want everyone to have it for free. I want people to be successful. And I would rather have a successful account than have someone purchase a one-time fee for a training program or access to me. So again, here's my email address. Reach out to me about anything. You want to talk markets, you want to talk T3, you want to talk opening a prop account, becoming a professional, or opening up a retail account. You want to learn more about why we're better than basically all the other brokers out there as far as retail trading accounts go. Reach out to me. Here's my email address. Or, if you find yourself in the Wyoming, Idaho area and you like to ski, reach out to me. We can meet up and get some runs in. All right, I'm going to jump back to my trading. I've been sitting here doing this webinar, watching my P&L move somewhat rapidly, which always makes me a little bit nervous because I'm not as focused on it as I would like to be. So I'm going to get back to my team. I'm going to get back to my trading. Once again, reach out to me with any questions about anything. It's been great entertaining everyone with this week's webinar, and I'll look forward to doing it again next week.